Hey everybody, Kimo Sabi here, giving you an update from the last video that I put out. Prices has apparently put in a bottom here. As I was saying, it's quite possible, but once you do put in that bottom, you're likely going to have a lower high that comes in at around 120 area. That's where your liquidity is. Currently looking for that liquidity to be taken. How does this chop up and go? It might end up looking like some kind of five-wave structure, though I don't trade the 1, 2, 3, 4, 5, but you might have something that looks like 1, 2, maybe 3 is done, or maybe 3 comes down for a little, looking like a leading diagonal. I think Elliot wave traders would look at that and be like, well, I see 5, so I have to trade to the upside. That's fine. You would manage your risk off that low, and that is an Elliott wave trade setup. What I'm seeing is a sell setup because you do have a low, you have a higher high, but now you have a lower low. So that lower low, look at how much lower your lower high is going to be right at previous resistance. And we could take this chart and flip it upside down. That looks like a buy setup to me. Right at previous supports. This is a standard trade setup where you have a high, a low, higher high. That's your show of strength. This is a back test of the range where you're going to find support that wasn't tested anywhere here or here. Comes back down and test that for support. So the trade setup would be buy previous support, stop loss goes at the low, and expect liquidity to be taken. In this case, it would be around the 95,000 to all the way down to 88. The crazy eights playing it again. So that's the buy setup, which really is a sell setup somewhere around previous supports. Current idea right now is 120, 700 based upon the matching legs. So let's look at the matching legs. We're on a 12-hour chart here. And just to get the colors out, let's put this on a line chart. All right, I have no idea how this happened, how my line chart is of various colors, but hey, let's leave it like that. Currently, just seeing the legs matching, like this move up from 74,000 up to 125,000. It doesn't look like a completed move, but what I do see coming off of there is something that resembles down there. So let me draw that out for you. Looking at this leg that moved down and matching it with that leg. Those match in time and price on a closing basis just fine. This leg appears to be repeating right up there, expecting the 120 area eventually to be hit in the next few days or so. But like I said, it's probably going to be a sell setup, at least on the first pass. Once you grab that liquidity, you're likely to sell off. Does it go and break the lows and mimic this pattern, giving you some kind of what looks like an ABC? Maybe. And then maybe you get this leg back up to back test the middle point of the range again before ultimately dropping down and repeating that leg. So you would drop down and reaccumulate down to 88,000. So that would complete that move with there, then expect that leg to repeat. So that might be the weekly cycle low coming in like October, September, end of September. Yeah, probably more so middle to end of October, if I had to guess. That would be the weekly cycle low idea from Bob Lucas and potential Camel Finance, maybe looking at that as well. And it is valid to think of it going down from here, just because you do have the lower low on first expectation. You have to expect a lower high to come in because there's your high. So lower low, lower high, and expect for this liquidity to be taken. That's where I would be looking at. That's currently the trade idea. Where is that invalidated? Well, as soon as you close a higher high. If this closes a higher high, then you have a higher high, higher low situation. Then you push up. So you trade things as they come. And the undeniable thing that happened in the chart. You can't deny it. This has closed lower than there. So you have a lower low close. There's no denying it. So in order to negate that, this has to close a higher high. Once that closes a higher high, it's cemented in the chart. You closed up there, you're in an uptrend, buy the higher low, and just keep buying because this leg is likely to repeat. So we'll see what we get. But I am kind of expecting now this leg to repeat based upon this lower low close. So say price action does come down for a weekly cycle low, that would be that low. Let's zoom out to a daily chart. If price was to mimic that leg, giving you the one-to-one extension, let's just match the leg here on closing price. 88,000, let's mark that off. The one-to-one extension, which I think is previous supports. Let's see if they'll act as support again. And taking a trend-based fib extension from the lows, 50,000 lows, it was 49,000 on a wick basis, but the closing price was 53, and you measure that leg up, and then you project from the 88,000, the one-to-one extension gets you in the pocket of 178 to 215. So let's draw that out, see what that could potentially look like into a cycle peak. So if this does repeat over here, something like that, there's your correction. And the leg that comes out of there should start off fairly slowly and then just move. Something like that. Out of here, you'll start slowly, and then it'll just move, and then pop and pop a few times. Probably getting over 200,000. I think 210,000, 215,000 is not out of the question. And then after that price action completes, this should be the cycle peak right up there. What happens after that, we will have to see. I would guess it would be an area to lock in some profits, dump the whole stack. You do you, play your game. But I'd be on watch for this price action from last summer to repeat here and to have a shallow, quote unquote, bear market into the 4-year cycle low to potentially repeat the earlier portion of this cycle before the halving, to repeat that up there before the next halving, and the 2027 potential peak being left translated happening before the next halving. And that will be looking like this cycle is kind of fusing into the next cycle. That would be a potential scenario. Is that what's happening? Won't know that until probably late 2026, but something I'm definitely on watch for. The other scenario is this is your A, this is your B, and this terminates the C of the entire cycle. And out of that, you come back down for 50,000 liquidity, 44,000 would be a nice round number to potentially look for. But the key idea is to lock in some kind of profits if prices do reach an extension that looks complete, and then see if this pattern does repeat. You'd only get down to 140,000 for a bear market low if that is the case, and then you push up spectacularly out of there. It would be fast and furious. That may be your fear-driven fifth wave that has kind of been discussed for a while. Let's take this down to linear scale and do some Elliott wave theory ideas. So recently I've been potentially contemplating that we may have completed a 5-wave impulse in Elliott wave theory, and that's just wave 1. So if that is wave 1 and we just completed a wave 2 down to 74,000, this can be wave 1 of the third wave. pretty crazy to think about, but I'm open to the idea. More so just how choppy this has been, kind of going up. It's like stair-stepping price action that's not making Bitcoin like progress, which could be the asset class is just maturing. I'm open to that idea, but it could be doing something that others are not expecting. So I think I was saying that we had a potential 220,000 target for the end of cycle. That can be your 1.618. And a 1.618 is where I would be looking for a wave 3 if this entire thing is wave 1, 2. Your wave 3 would make it up somewhere around there, the 1.618. For a shallow wave 4 that may take its sweet old time, and that would retrace probably 50% of that entire wave, which would get you down to roughly 140 before pushing up for a fear-driven fifth wave that can extend quite a bit. That would actually look appropriate to me. Getting up to really high numbers, probably in the 500,000 range before it's all said and done, but that's more 2027 than anything else. First things that need to happen is a push up into 200,000 area and then hold above 140,000 or the 50% retrace, whatever it is. So assuming that this Elliott wave count has merit, then you would take your potential wave 1 of wave 3 here and just measure that. Say you've got 5 waves up into there, and you are about to do wave 2 that gets you down to like 80,000, 90,000 previous supports there. So the wave 5 extension, the 2.618, will get you to 222,000, maybe overextends a little bit, maybe pushes beyond that. But ultimately, it's giving you wave 3, which is not to be expected at this point in time. We'd be expecting a fifth wave being the end of cycle, unless if Bob Lucas's idea of the two cycles melding together, you'll get 1, 2, wave 3, up to 180 or so shallow retrace, if it retraces at all, and push up into that 1.618 target. So then your bear market into the next 4-year cycle low would be shallower than expected, and ultimately doing a left translated cycle into 2027 to match with the 18.6-year real estate cycle, and the DXY potentially getting its 3-year cycle low happening in 2027. So this could be what we're looking at. Of course, not a guarantee. Like I said, things have to happen first. I mean, you need to maintain the uptrend, of course, but if you have higher highs and higher lows, there's no reason not to expect this thing to do these type of things. If you do have a bear market that sets in a total economic collapse, this is going to come down here and you're going to be printing lower lows. You sell the lower high and push down further, and then you're doing something totally different. But based upon measurements, timing, that's kind of what I'm looking at this point in linear scale, and log scale get you those high targets. If you were to only retrace your bear market low, like I was saying, repeating legs, if you repeat this leg from like 92 to 88,000, push up into 200,000, that completes that move, and you repeat the last summer's price action somewhere over here, giving you what looks like a wave 4. And if that only gets down to 100, let's just call it 150,000, we'll match that leg. Let's say it goes to one, we'll just put it at 148. The 1-to-1 extension would be 700,000 if that matches like that. So let's draw that out just to see what it would look like. So potential idea here of making your correction right here. This is of course not like Elliott wave. This is different than this leg. pushes up to just over 200,000 to complete that move. And then out of there, repeat that leg for consolidation for 6 months or so. And then this leg repeats out of there, getting you up pretty high. Then this consolidation before its final peak. Something like that. Making the two cycles kind of mixed together into one continuous, weird, hard to understand pattern using any trading method. And the only way you would see it is just maintaining the higher highs and higher lows and matching the legs and saying, well, there's a trade setup based upon that, based upon that, based upon that. And as time moves on, I will have invalidations for those ideas and we'll see if they get hit or not. It's a trade setup, it's an idea, and those ideas do have invalidations that are pretty easy to implement. So follow along. And if you're not following along on Slice, you're missing out because these are great trade setups. So we've got some ideas. Don't know how this is going to play out in the future. This is very speculative, looking months and potentially years in advance, just matching patterns and looking at price action the way it's developing, implementing Elliott wave theory, some Wyckoff and Gann theory, and of course matching legs and just thinking about what could be going on, just to leave the door open to that, to have a Bitcoin cycle peak that then doesn't retrace as far as everybody wants, where you want this lower liquidity and it doesn't give it to you. So something to be open to for the next 4-year cycle low is a shallower retrace than expected. That doesn't mean don't take profits at the cycle, the end of cycle. We are nearing the end of the 4-year cycle, and the time to allocate is at the beginning of the next cycle. So take that into account. Well, hope that helps. Hope all these ideas kind of get things flowing. I think I have another video on this that I want to share to kind of tie a bunch of other things together, but it's taking me a little longer to put it together. So we'll see if we get the price action. We'll see if this sell setup actually works out to push price down to lower liquidity, or if we end up getting the higher high and maintain above this range. That would be pretty epic. And then we would probably be going into a blow off top the way that quite a few people are expecting. I'm kind of the opinion that we're going to push down first, just based upon trend. It did make a lower low. First expectation is a lower high until it's not. So hope that helps. Have a good night and keep them stops tight.